Hello, good morning. My name's Lou Pelosi. It's February 4th, and I'm going to walk through my trading routine in the morning, particularly how I get in and out of zero-day option positions. Let's take a look at what we have going on at the open. I have a few screens that I watch fairly closely to help me decide when the best entry points are in the morning. Today's trade is going to be the following. We've called the intraday trend neutral or choppy, not much singular direction. Intraday volatility is high. So what we want to do is we want to buy an iron condor. We're going to buy the inner strangle and sell the outer strangle. Depending on where the price opens, it'll be centered around the current price in the morning. So let's take a look at the screens that I have. Here's your Magnificent Six. Looks like Meta's opening a little lower, Microsoft a little lower, Apple up. So kind of a mixed bag here. We know Amazon's going to be reporting later today. So that's something to keep in mind. Um, that's one thing I look at, then I just see generally the trend. It's kind of been upward, but very choppy in between. Vols ticked higher. The VIX is now at 1805. Something to keep an eye on. Sometimes when vol goes up, could be a signal that there's going to be downward move or some sort of move in the market. Here again, just looking at a 10-minute candle bars, set myself in the morning. We're right here at the moment. See where things open up. Usually the morning, between 9:30 and 9:40 is a lot of volume coming in. Market's deciding what to do. Finally, this is my own screen that I created using gamma capture volatility, which is in this green line here. You can see the 1-day gamma capture volatility is 12.8 and the 30-day is 10.2. So we're a couple percentage points above the 30-day on this day. And here it's kind of the green line above is your opening range above, and here's your opening range below. So I'm just trying to gauge what the opening range looks like. Tried to push lower, came back. So the opening range is fairly neutral. So let's get into the trade. Again, it's going to be an iron condor. I like to think of it as buying a put spread and buying a call spread. So I don't always put it on as one trade. I typically put it on as two separate trades, depending on what the market's doing. If I can time it a little better, I will. But if not, I like to buy these before 9:45, or at least before 9:50, just because then you get the benefit of when you're buying an option, you get the benefit of the little extra volatility in the morning. Although it doesn't always help, but that's typically what I like to do when I buy options. Get in sometime between 9:45 and 9:50. Therefore, giving yourself a little more time, a little more volatility. These zero-day options don't lend themselves to a long time horizon, so you kind of have to get in early, especially if you're buying. Now, if I'm selling an iron condor, I would not sell too quickly because I really want to see what's going to go on in the open. And then let's come back to this window here. Add another add another indicator onto this one, which is well, actually we'll add it here. This dotted green line and the dotted red line will be my put and call strikes. So I can follow what I've where I've gotten in on the condor. So this will be my strike lines over here. So all right, so let's take another quick look at the market. Again, that's a pretty neutral opening. chopping up, chopping down. So let's just put on both legs and see how the rest of the morning goes. So first, I'm going to buy my put spread, and it's going to be basically a dollar. Uh, sorry, it's going to be a dollar away from the current market price, and then $3. So I'm going to buy a $3 wide put spread. So let's do that. Put vertical. Sometimes I use put spread as a way to say put vertical. So it's on the SPY is my underlying. I'm buying a put vertical. I'm going to buy the buy to open the 690s, and I'm going to sell the 687, $3 away. Just do it at the market. It's fine. So I'm going to be paying 85 roughly for a 690, 687 put vertical on the SPY. So place that order. Okay. Hopefully I got in at a good level. Let's check my fill. Yeah, I got it at 83. So I bought the put vertical at 83. Now I'm going to give the market a little time to pull back because I don't want to buy the call vertical when we're up at the top of the range here. Let's let it pull back slightly here, which it's doing, and then I'll buy a call vertical. And the combination of a put vertical and a call vertical is my iron condor. Again, I leg into it because I want to see if I can get better levels for each side of the market rather than putting it all on at one time and missing out on some market timing. So okay, so it looks like a little bit. Again, these are minute bars, so it's a little fast. It's harder to say. But, again, if you look at the opening range, there I can fix my put vertical here. My strikes were to 690, 687. So I go back here, put 690 and 687. Okay. So that's what I'm looking at on the put strikes. I want the market to come down below these levels so I can start collecting on the support vertical. So now I'm going to put in a order for a call vertical. Again, if you can see this is these dotted lines are the strikes that I executed. Yeah, I bought the 690 SPY expiring today for 182, sold this 687 put 99 for a net of 83, and now it's time to put on the other side of the trade, which is a call vertical. And here a little bit of a pullback, so maybe you get a little better fill price on the calls. Again, I'm looking for the SPY vertical call. And right now I would say 690, so I'm going to look at the 91, and $3 out from 91 is 94. So I'm going to buy the 91s, and I'm going to sell the 94 call. So I'm buying this SPY 691 call. I'm selling the 694 call. I'm paying 115 for that, for this call vertical. 690, so 694. Okay, place the order. Status. And now you can see, I'm using Charles Schwab, but you can see what the market does. And as the market moves to one side of the range, I'll take out the call vertical and one of the legs. So let's see if we can make that. Let's see if the market can make that happen today. So let me see here. And I did a 91.94 here. So I come to my little screen where I say call 91. Sorry, 91 was a low strike. The high strike was 94. Okay, so this is what I have on today. For a fairly tight um, iron condor, and I'm looking for the market to basically break through both of my strikes, both to the upside and the downside. And when that does, I'll cash out and call it a day. So again, you can see it's in a fairly tight range. Just watch this happen. So now it's gone through my call strike. Let it run a little more. Okay, so now we're up to 691 and a quarter. Made some money on the call strike. Let's just, for the sake of today's video, let's say it's reached a P&L threshold we're uncomfortable with. So I paid 125, if you recall, for the call vertical. I'll get out at let's say 145. Again, just to demonstrate how I personally move in and out of these condors. So I'll place an opposite order. I bought 125s. Now moving towards the high of the morning. This uh, green line is the high of the morning. This purple line is the low of the opening range of the morning. So as it pushes higher, the calls are worth a little more. Well, it's dropped back down. So it's, again, the market timing's not always perfect, but that's the general idea, is to say, okay, we've moved into a level up towards the high of the day. My put vertical is making the short put on the is making a little bit, but mostly I want to get out of my call vertical just to take some profits and say, okay, that was a good trade for the day, and we'll wait till this pushes a little higher into the above my strike, above my 691, somewhat more than what it is now. We'll see if it can't reach this 91 and a half level, which is the morning open high. Or on the other side, if it drops to 690, I'll get out of my put. So it's either side. Um, Kind of happy to have it hit both sides, which is what I want. This is my 690 here level. So if you can see this. All right, now it's dropped down to where my puts are starting to get put strikes crossing. So let's now focus our attention on the puts. So instead of kind of missed it for now on the calls, but it's okay. There's always a second chance typically. So all right, so if I paid 83 on my puts, now I'm going to do the opposite, and let's say I'll get out at $1 just for the sake of sake of this trade. I, so I paid 83 for the put vertical, and I sold 103. So, there's your quick scalp of 20 cents on that one. Those type of levels are, completely subjective to what you're trying to look for in terms of returns. Uh, Now, on the other hand, on the calls, I might get out of my call leg as well, my 694, because I, if you recall, I sold that call as part of a vertical, so I sold it for 80. So maybe if I get out of that, then I'll just have to look. This is at 694. So I'm out of the put vertical, and I'll get out of this 694 as well. And then I just look for the market to come back to 691. So let's get out of this 694 call. Let's trade. Options. 694. And I'm buying to close that. So, okay. So I cashed out of my put put vertical for 20 cents. I cashed out of my call, my 690 call. Sorry, my 694 call. I cashed out for 30 as well, roughly. That leaves me just with a 691, and this is all I have left. So I can take out these strikes here, put these down to 0. And now I just have on the 691 call. When that rebounds, cash out and call it a day. So there you have it. That's my initial play in the morning. Take a little profit, and then kind of reduce the expenditure that you have on your remaining leg. Just have to watch the market now for a rebound, and then turn around and sell the 691s, and hopefully close out for a good day. So thank you guys for listening, and let's hope you guys come back later this afternoon or see what the market holds tomorrow. Thank you very much.